window.
Hello traders, Gary Wagner here. It is June the 20th. It is Monday, approximately 10 a.m. in Honolulu, Hawaii, and this is the daily report for gold. We have gold in quiet trading, currently down about 60 cents. It's been up about $1 to $1.50 higher. As you can see, current print on the board is 1539 and change. As we look at the marketplace today, you can see it is very, very quiet. This is our daily chart, and as you can see, the marketplace itself is forming that consolidating candle because it's close to unchanged right now, that doji. In terms of fundamental news, what we have in the marketplace is really that same push-pull scenario. We do have crude oil prices. They are trading lower this morning. We have a steady dollar, but we have that European Union crisis kind of brewing over the weekend in terms of coming up with any kind of a bailout or resolving the crisis and debt restructuring over in Greece. They were unable to come to any sort of conclusion. In fact, the IMF, the International Monetary Fund, came out today and said that if they don't do something, that this type of a crisis could carry over into the European Union and maybe even globally. It was a pretty dire statement, in my opinion. Now, when we look at the board, here's what I'm seeing on a technical basis. We have good support in this one channel line, but we also still have, as you can see, resistance right in here. And that resistance is up around 40 to 41. That's also the high of the day. Now, as you know, it is my belief that this is a very critical area. This is that 1551 area, and that's the top that we really need to see this market take off before I believe we're going to see it take off and go running. We've been trading in this narrow and consolidating trading pattern for a couple of weeks, but my sentiment right now is, if in fact we see this market break above this particular area, which is this channel line here, the next major channel line that I have is going to be somewhat higher, as you can see, and that should take us to the top of the range. But we're certainly not out of the woods yet, so we will have to wait and see how this particular crisis, I believe, in Greece pans out, because I believe that if we didn't have crude oil prices lower, if we didn't have a firming dollar last week, it's steady today, we would have seen these precious metals take off. It is that push-pull scenario right now, I believe, that's really, really holding gold back. So my sentiment is, once or if that changes, in other words, if you get any kind of turnaround in the crude oil, if you get a turnaround in the dollar and that begins to go south again, and you have the same fundamental issues right now with the European Union, I think we're really going to see this precious metals market take off. Traders, we are looking at a 380-minute candlestick chart, and this is in Japanese Henkin format, a Henkinashi, or an average chart itself. And as you can see, on a shorter term basis, we clearly have this uptrend that is continuing. Now, the one thing is that in a choppy market and in a consolidating market, what we are lacking at the same time is the kind of breakout Henkin candles that we have typically seen as this market's moved up. Now, what do I mean by that? I mean that you genuinely get nice size bodies throughout, and more importantly, you get the absence of these lower wicks. As you can see here, when the market was trending, that we had in many cases the absence of these lower wicks. Now, we did get that for 3 candles, Henkin candles, as you can see here, as that market moved up, but we are back to an area in which the Henkin candles themselves are beginning to show these lower tails. Now, what that tells me is that we are in an uptrend. We've got the green candles. We do see this market moving higher, but at the same time, we absolutely do not have the kind of strength that I would like to see that would be telling me that this market is about to break to higher ground. My personal sentiment right now is that once we do break above this particular area of 1551, and that's the highs that we're looking at. My sentiment is that we should see the market propel to a new high or to about the old highs of about 1575 at first, and that could be the beginnings of a nice rally, because my sentiment is that should we begin to breach that 1551, we have a real opportunity to go and attempt to take out the highs that are in the market around 1577. Now, there's one other way to look at that, and let me pull up our 628-minute chart to do. And the other way to look at it is, as you know, I've been using this for my minor count right in here. And what I've been looking at is, as this market moved up, I'm looking at this as wave 1, this is wave 2 here, and that we're currently in wave 3. Now, according to Elliott wave theory, wave 3 cannot be the shortest of any of the impulse waves. So if it is just even, I've just cut and paste a line, and I will move everything over, but I've cut and pasted a line so that we can determine where this market, in fact, might want to go. I need to auto scale that, so give me 1 second. And as you can see, by doing that and just looking at the relative move that we got in wave 1, an equal move would take us to about 1575. Now, as you know, 1575 is just at the record top that we've had in gold. So the first thing we've got to see it do, of course, is we need to see it take out the 1551 area. That being said, if we are able to do that, and I do believe that we will see that, if we are able to do that, our next real target area is going to be around 1580 and above, because as I said, we're not going to see wave 3 be less than wave 1. So we'll have to see how this market wants to pan out, and more importantly, how this crisis in Greece pans out over the next couple of weeks. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily update and review. Bye-bye.
Many sights to see, and when I look in my window, so many different people to be, that it's strange, so strange.